Understanding load funds, a comprehensive guide. Load funds have long been a significant aspect of the mutual fund landscape. For investors considering their options in mutual fund investments, understanding load funds is crucial. This article delves into the nature of load funds, their types, advantages, and disadvantages, as well as the evolution of mutual fund sales practices. What is a load fund? A load fund is a type of mutual fund that imposes a sales charge or commission on investors when they purchase shares. This charge, known as a load, compensates sales intermediaries, such as brokers, financial planners, and investment advisors, for assisting investors in selecting appropriate funds for their financial goals. The fundamental purpose of this load is to ensure that the investment professional who helps the investor incurs a fair remuneration for their services. Types of loads. There are three primary types of loads associated with load funds. 1. Front-end load. This is a charge assessed at the time of purchase. If an investor purchases $1,000 worth of shares in a front-load fund with a 5% load, only $950 goes into the investment, with the remaining $50 covering the load. 2. Back-end load, also known as a contingent deferred sales charge, CDSC, this fee is charged when an investor sells their shares. Typically, the percentage decreases the longer the investor holds the fund's shares. 3. Level load, this involves a consistent fee, typically expressed as a percentage, paid annually for as long as the investor holds the fund's shares. This fee is often listed as a 12b-1 fee, which is used to cover marketing and distribution costs. Load funds versus no-load funds. Load funds should be contrasted with no-load funds, which do not impose a sales charge upfront or upon selling the shares. No-load funds are typically offered directly by mutual fund companies, enabling investors to avoid commissions or other intermediary fees. While some investors may assume no-load funds are inherently superior, it is essential to consider the expertise and guidance load funds can provide. Understanding the rationale behind load funds. While burdensome, the fees associated with load funds serve specific functions. The charges help fund managers and advisors research different funds, monitor performance, and make informed investment decisions on behalf of their clients. This professional support can be invaluable for less experienced investors who may not have the time or expertise to navigate the complex world of mutual investments by themselves. Moreover, investors opting for load funds might find that paying upfront fees can potentially reduce the total costs associated with ongoing management fees that no-load funds impose. As loads are typically a one-time or decreasing fee, they can be more financially manageable for an informed investor. The evolution of load funds. Load funds have undergone significant changes since their peak in popularity during the 1970s when they faced criticism due to high front-end loads and obscured fees. In response to growing consumer advocacy for transparency and fairness, the mutual fund industry evolved. Introduction of multiple share classes. In light of the criticism, mutual funds began offering multiple share classes that provide various options for investors regarding sales charges and fees. This change aimed to create a more competitive marketplace where different investors could choose the fee structure that best suits their financial situation and investment strategy. Conclusion. Investors should not shy away from load funds without fully understanding the context and objectives behind the charges. While no-load funds may sound appealing due to the absence of a sales charge, load funds can provide valuable services and expertise that may justify their costs. It's essential for investors to evaluate their personal financial situation, investment knowledge, and long-term goals when choosing between load and no-load funds. By doing so, they can make informed choices that best serve their financial interests.